Hello, everyone, and welcome to Neighborhood Credit Union's webinar, Seeking Fund, your saving strategy for unexpected expenses. Before we officially start today's webinar, we want to take a moment to cover some essential housekeeping items. We are recording today's webinar, so all phones are muted to cut down on any background noise. We will share the recording with everyone who registered. If you have a question, please submit any questions via the chat. We have just a short time today to cover a big topic, so we will be answering any questions at the end of the webinar. Please keep your phones handy. We have several QR codes to share with you today. Get ready to scan. You will receive a follow-up email with a link to the recording of the webinar, as well as some resources related to what we discussed today. Keep an eye out for any email with the resources and recording in the email address connected to your registration. Again, as we get started, please be sure to send questions anytime you think of a question. We'll have time at the end to answer all questions. So please put all your questions in the chat and let's get started. Let me introduce you to Amber, our presenter.
Thank you, Charlotte. Welcome everyone to today's webinar. As Charlotte said, I am Amber Russell. I am a Partner Experience Manager out of Michigan for GreenPath Financial Wellness. In my current role, I work with credit union partners like Neighborhood Credit Union and employee partners that want to bring financial wellness services to their employees as well as their members. So I'm excited to be here with you all today to talk about sinking funds. So today we'll be discussing what a sinking fund is, the difference between emergency savings and sinking funds, and 5 steps to sinking funds. You may be thinking, what is sinking funds? Sinking funds is a fixed amount of money you save each month to pay for periodic expenses or other savings goals. To get more specific, when I say periodic expenses, these are expenses you're paying a few times a year or even once a year. These are expenses that may be challenging to account for in your monthly budget. A sinking fund is developing a way to take the money you're going to need to pay these periodic expenses and setting it aside for when you need it. So let's talk through the difference between emergency savings versus sinking funds. Before you take time to create your sinking funds, make sure you have something for emergencies. $1,000 or $2,000 for deductibles, or something that is a true emergency and you need the money right away. Eventually, your emergency fund could have a sinking fund component in order to help that fund grow. But determine first what you need for an emergency fund before you spread out your savings into sinking funds. For me, an emergency is when all other funds are exhausted or there's a loss of income. I don't plan to touch emergency savings unless there is no other option. Now, many times what we consider to be unexpected expenses are actually things we can expect and make a plan for. So let's go through a few examples of situations and determine if the expense is something we can plan for or if it's truly unexpected. I'm going to ask you to open the chat. We're going to have a little bit of an engagement moment here. So we're going to go through these different emergency or unexpected or expected expenses. And I'm just going to ask that you throw in the chat if you think it's an expected or an unexpected expense. So back to school supplies, is that a planned expense or an unexpected expense? If you have access to the chat, it should be at the top of the screen here for you. Planned. Yes, planned. This is something you can set aside funds for before you need it. The next one here is holiday gifts. Holiday gifts, is that planned or unexpected? Expected, planned. Yes, again, correct. That is a planned expense. Now, a tree falling on your garage. Definitely unexpected, right? Never fun when things like that happen. Now your pet gets sick and you have to take them for a procedure. What are we thinking there? This is a good one. So this can be planned, but this can also be unexpected, right? So you can have a sick pet that gets sick unexpectedly, but you can also plan for those things to happen. And then lastly, new brakes for your car. What are we thinking on that one? Planned. I'm seeing planned. Absolutely. That can be saved up for, as keeping our cars in good shape is important, right? But this could also fall under unexpected too. Maybe the brakes go out unexpectedly. I thought that was the last one. We've got one more. The transmission goes out on the car. What are we thinking there? Planned or unexpected? So we all know that feeling when your car breaks down, especially when it's unexpected. So as you can see, we can anticipate quite a few things that could happen in our financial lives. With that being the case, let's turn unexpected expenses into expected expenses by using sinking funds. So make the unexpected part of your budget. Then there aren't many surprises. There are far fewer emergencies with our finances when we do this. Insurance, life insurance, car insurance, car registration, kids' activities, or memberships or programs. Some of these sinking funds can be goals you have, but the most practical use of the funds is to help you save up for expenses you know you're already going to pay for in the future. Sinking funds helps you have a plan for when those expenses come by planning. We then turn the unexpected into the expected. So there are 5 steps to sinking funds. Let's go ahead and walk through those. Step 1, have a monthly budget. To add sinking funds to your situation, we need to know that you have a balanced budget and the income to cover the various funds you plan to set up. Your budget helps you to assign every dollar a job. With your budget, you can assign funds every month to go to your sinking fund. Step 2, determine your funds and the monthly amounts. So look at some credit card, debit card transactions, payments from your checking account. What are those expenses you're periodically paying throughout the year that sometimes surprise you? Or maybe you have a little stress thinking about having to pay those bills. So let's take a look at some examples. Car maintenance annually is $850. The monthly amount to set aside is $71. Car insurance annually is $900. The amount to set aside monthly, $75. Holidays or gift giving, $500, which is $42 a month. others are going to be ongoing. The transfer, the full amount once a month, or you could break it up and deposit part of it each paycheck. So that total amount would total $188, which you could do once a month. You could split that up into weekly, bi-weekly, or right along with those paychecks. It's important to start simple. Determine a fixed amount and or percentage of income to set aside. An example would be 5% of income or $50 a month. So step 3 would be set up your funds. How do we tactically go about creating these funds? So you probably already have a savings account at neighborhood credit union or any other financial institution. You'll want to use that savings account or ask to open another account, or even see if they offer sub-accounts to help you differentiate how much you're saving for each sinking fund. The trade-off to earning significantly more is that you may need to hold your savings account at one institution and your checking account at another. While this may initially feel awkward if you're used to both accounts being held at one institution, today's availability of electronic transfers between institutions and the speed at which those transfers can be executed make moving money between your checking account at one institution and your savings account at another institution a relatively simple matter. You may also find that unlike traditional brick and mortar institutions that offer a one-stop shop for all your banking needs, the institutions offering high yield savings accounts typically limit their features or offer few or no other products. Many don't offer checking accounts and few provide ATM cards, requiring all inflow and outflow to the savings account to occur by electronic bank transfer or mobile check deposit if it's available. High yield and money markets may have minimum amounts for opening, or you may have to keep the account above a certain balance. At the same time, there may be check writing privileges or having a connected debit card. Money market accounts are offered at traditional and online banks and credit unions. They have both advantages and disadvantages compared with other types of accounts. Their advantages include higher interest rates, insurance protection, and check writing and debit card privileges. Credit unions generally require customers to deposit a certain amount of money to open an account and to keep their account balance above a certain level. So step 4 would be fund your funds. So automate deposits or transfers. Make sure that that's done automatically. It makes it easier for you. You're not seeing it. It's just being pulled and going right into that transferred account. Use windfalls like tax refunds or bonuses to add to your sinking funds. And then find extras in your budget. So where you find extra funds, use those to fund your sinking fund. So let's take a look here at some categories. We've got a budget here, a mock budget, mortgage, $1,200, gas, $150, cell phone, $100, cable internet, $75, food, household items, $800, life insurance, $100, childcare, $700, car insurance, $75, gasoline, $100, miscellaneous, $50, and then we've got that sinking funds or savings goal option of $150. So we work that into the budget. So for periodic expenses that are $100 or less, I don't usually create a sinking fund. To me personally, it overwhelms me a bit trying to keep track of it. But what I do is I include a miscellaneous category in my budget, which allows for a small cushion to develop in my checking account. For those smaller periodic expenses, I use this cushion. So when we're looking at that $150 and we're separating that out into those different sinking funds, we've got back to school, $30. We've got $30 going to car maintenance. We have $30 going to occasions. We have $30 going to house maintenance, $30 to holidays, 30 to family fun. Oop, I didn't mean to do that. You can see here that the back to school goes to 0 here. And that's because you may only need to save for back to school for a significant period of time. And then once you've freed up that $30, you can turn it into another sinking fund. So here we've chosen family fun for that to go over to. Now, having a sinking fund gives you confidence in facing what's ahead. So once you've done that, step 5, let yourself relax a little, smile, and enjoy the journey that you're on. And then continue to transfer from your savings to your checking and pay for the item. In the end, you're turning the unexpected into the expected. So determine your sinking funds, develop a plan with your budget to save, and use sinking funds to pay for those expenses. If you need support on this journey, do not hesitate to reach out to GreenPath. We are a partner of Neighborhood Credit Union, and GreenPath provides a variety of services, all designed to help people understand and work towards financial wellness. All of our basic financial assessment conversations are free and confidential, so you can take advantage of a free financial assessment with GreenPath. We can discuss your spending plan, review your credit report, discuss your housing concerns or different student loan options. And then we do specialize in helping people explore options for dealing with debt. GreenPath also provides a couple of worksheets and guides. There are going to be some of these that are attached to the email that's sent to you after this webinar. Budgeting worksheet, there's an aligning priorities workbook. Neighborhood Credit Union, again, will share these all with registrants for the webinar. You can also find all of these worksheets and guides and many, many more resources at greenpath.com/neighborhoodcu. Additional resources, if you are interested, you can scan the QR code here. We have several digital online courses. One that is relevant to today is making the most of your money. This might be a place to start. This is also free and confidential. Another course, again, that's relevant to our topic today is the Aligning Priorities course. It's attached to that Aligning Priorities workbook. This might help you decide which expenses are most important to be able to get on track with a budget. If you're interested in learning more about tips for home buyers, you can check out our recorded webinar to view on demand. You can scan the QR code now that is on the screen. You can also access these recorded webinars at the greenpath.com/neighborhoodcu as well. We also have an upcoming live webinar if you may like to register today to attend next month, and it is Homebuyer Hacks. So you can scan the QR code now to open that registration page. This is where you'll learn more about the webinar and decide if this is the right fit for your needs. I want to take some time to answer any questions that anyone has. You can bring yourself off mute, or you can, of course, use the chat.
Well, Amber, I want to say that I absolutely love this webinar. I think this is the first time we've done this particular one.
Yes, yes. It's a really good one because sometimes we think that, oh, I have an emergency fund, I'm good, I'm covered for my unexpected expenses, but also realizing that with sinking funds, you can really even make it easier for yourself. Separate those things out. I know for me, and I'm going to use just an example, is when I have a savings, whether it's emergency or a savings account for any specific reason, when I have to actually use that, it gives me anxiety a little bit, right? When I have to empty that fund, even though it's there for that purpose, I've saved this money for car repairs or I've saved this money for a trip. For some reason, actually emptying that fund can really cause a lot of anxiety and pressure and stress. So I encourage you, use the sinking funds because it separates those funds for you. And it really helps you say, okay, this one's here for this one's here for this. That way, when you are using them, it doesn't feel like you're emptying everything. You still have those other funds in the other areas.
Yes, yes, yes. I mean, that's something that I'm going to actually put in practice myself because when I use my emergency fund, I do feel like I've depleted everything.
Yes.
Now I can use one of these smaller funds and still have everything else remaining. So I can see how that would save me a whole lot of anxiety.
Yes, absolutely. We know money creates a lot of emotions, right? And it's just about finding what's easiest for you and what really helps you in times of unexpected things that happen. We know life happens, right? We know it's going to happen. It's not about if it's going to happen, it's about when. So these are just strategies that will really be helpful for you. So utilize the resources. We're going to send you resources and the recording from today's webinar. I know it was a short one, but it was filled with really good information. So we hope you got a lot out of it.
Yes, it was. It was a lot of great information. Thank you for sharing that information with us. I am really excited, and I'm going to even make some adjustments into my own plan. So, any other questions? Well, thank you everyone for joining our webinar today. We were excited to have you. And again, we will be sending you a copy, a video of the webinar, a link for you to click on. If you register, you will get a copy of it. And you can always reach out to us here at Neighborhood Credit Union. You can reach out to community relations at myncu.com. And Amber has her QR code out for GreenPath Financial Wellness. It's a great organization. We've partnered with them for many years. So please don't hesitate to reach out to them. And again, thank you so much for joining us today. Bye.